Good afternoon, traders, and welcome to the nthezone daily ACD recap for Tuesday, May 17th, 2016. In these recap videos, I will go over the best ACD setups that occurred on this day. These videos are intended to show the type of trades the ACD method offers on a daily basis. And so let's get started and take a look at what we had today. Now, yesterday we had a very strong day, and we closed above our pivot range. So going into today, we would expect our pivot range, the purple lines here, to be support. However, this morning we opened within the pivot range, inside the pivot range. And that's your first little warning that, hey, maybe we're not as strong as we should be. And then our first bar of the day, which is our opening range, okay, the opening range is this gray area, engulfs the pivot range. So what that's telling us is that Fisher calls the pivot range the meat of the market, okay, from yesterday. And so we're opening in the meat of the market, which tells you there's no change in sentiment. And so that's a little bit of indecision. And then when the opening range trades on both sides of it, there again, that's telling you even more indecision, and that's going to lead to chop. And so whenever you see the opening range engulf the pivot range, chances are you're going to see chop until they can sort out which direction they want to go. Whenever I see that, I always say, okay, I want to fade the A's. If they're undecided, then I want to fade the A's. And what I'm going to do is I'm going to go over how to fade the A. And so let's get into this. As price moved down towards our A down was at 2051.89. Now that's the actual number that I calculate, okay? And it's not a tradable number. Now, instead of rounding up or rounding down, I don't want to do that because when I'm looking at it, I can't remember, did I round up or did I round down? So I just put the actual number on the chart. And you can round up if you like, or you can round down if you like, whatever, but I rather not round up or down. I just put the actual A number on the chart, and then I don't have to remember, did I round this up today or did I round it down? And so anyway, today, if you faded this A, you had to get in front of the A down number. Now, the A down was, like I said, 2051.89. And if you round up, you would get 52. Okay, to the next tradable number is 52. If you put an order at 52, then you wouldn't have gotten filled because it only went to 52.25. If you rounded down to 51.75, then you definitely didn't get filled. And so these are decisions that you're going to have to make, and they're personal decisions. And if you're going to fade the A, I would say don't go any, if you're afraid you're going to miss out, okay? I wouldn't go any farther out than 2 ticks above this number here, okay? So you can see that basically that's about where it came, okay? You want the market to come to you, so you don't want to chase it. It's okay if you feel like, I might miss out if I don't, get either 1 or 2 ticks ahead. So if you place your order here, one or two ticks ahead, you get filled here. You have to ask yourself, okay, where do I get out if I'm wrong? How do I know if I'm wrong? Well, what I like to do is I like to use a stop, okay, of 11 to 15 ticks, and that's based upon the volatility of the market. So from the A point down, it would be like 49.25, like right about here. Okay, so here would be 11 tick stop, and I would say 11 tick stop in this environment would be adequate. Okay, and the one thing you can do is you can watch the A number. Today's A number was 3.61, and that's pretty average. If the A point number was like 561, now that's a little bit added volatility over the last 30 days, and you'd want to use a little bit larger stop than an 11 tick. I wouldn't go any farther than 15 because then it becomes too large of a stop. Okay, so anywhere from 11 to 15 tick stop. So here's where your stop would be. Okay, so you're going to go long here. You're going to fade this, and what you're banking on is you're saying they're not going to be able to confirm this A down. Price is going to bounce back. It's going to revert back to the mean, back towards the opening range, and that's what you're banking on. That's the trade. And you're going to say until they take out an 11 tick stop Or if price can come down here to this A number and spend 5 minutes, half the time of the opening range, and confirm that A down, now I've got to get out. Okay, so one thing you'll notice is that in here the most that you'll most of the time lose is your 11 ticks, or maybe possibly 8 ticks, or even 6 ticks. It's a small risk here to fade the A. And then this pushes up and it goes up about 8 points here. Okay, so this was a nice fade of the A. And one thing I want to point out is that if you go, let's say that the A down confirmed here, and you go short, where's your stop? Okay, well, Fisher says your stop has to be up here at the B point, top of the opening range. I like to say if it closes a bar back into the opening range, that would be my stop. Either way, those stops are larger, okay, by going with the A. They're larger than fading the A. That's why the fade the A is a high probability trade. Okay, so get in the habit of fading the A on the first touch. Now, so this trade worked out good. You got long here, worked out good for 6, 7, 8 points. And let me point out right here, it pushed up here and then pulled back almost to entry. Okay, so, but then it continued to push up. You have to get in the habit of holding this for a good period of time on these fades. Basically, you're just saying that if it confirms the A, I'm out. If it takes out my stop, I'm out. Otherwise, I'm holding it. Okay. Now, that was the fade of the A. All right. Now, price comes back into the open range, chops around, comes back down, attempts to touch the A down again on the second time. On this time, I would say don't fade the A on the second attempt. Okay. There's a high probability chance that it's going to fail. It's going to confirm that A down, and then it's going to lead to more selling. Okay. And that's what happened today. In here, this was a very dicey area. Some people might say that it confirmed in here. Some people might say it didn't confirm. I'll have to tell you, I've done this for years. This was a very hard call to make, okay, whether it confirmed here or not. If you thought that it confirmed here, then my advice is always don't sell in the hole when you're talking about an A down. Wait for a bounce. The bounce came. You want to wait for a bounce that is a bounce close to the bottom of the opening range. The reason for this is because you can put in a short here, and where are you going to get out if you're wrong? If they close a 10-minute bar back into the opening range, you get out, and that's a very low risk opportunity for a nice big reward. Okay, and so that's where you want to set up your short, because you're going to know immediately, if you're right or wrong, because if they can push up into the opening range and close a bar back into the opening range, then the chop is likely to continue, and you'd want to get out. Okay, so price rolls over. In this bar, it definitely confirms, and here confirms the A down, and then we're off to the races to the downside. Well, one bounce here back to the moving average line, and then puts in another new low here at 36.75. So this A down was a nice signal to take this afternoon. It's a bit of a hard signal to take if you ask me, and I'll tell you why. When you have this pivot range engulfed by the opening range and you're expecting chop for most of the day, it's hard to know whether this is going to come here and then revert back up into the opening range and close the day back into the opening range and just be like a 0 day where it can't confirm the A down or the A up and just go sideways for the whole day. So this is a bit tricky to take, because you're wondering, is the chop over? Are we going to trend now? Is this signal going to be a good signal, and are we going to sell off from here? And the answer turned out to be yes. But I'll have to tell you, mentally, this wasn't as easy as it looks. Okay. All right. So that does it for today. And hopefully, like I said, over time, you'll see how these fade the A's set up, how these pivot range trades will set up, and how to exactly trade these ACD signals. All right, guys, that's going to do it for today, and we'll talk at you tomorrow.